Hi everyone, my three key takeaways from my time at APPEC. So the first thing I'd like to speak about is oil prices because that has been under much discussion throughout this week. So there's a general expectation out there that oil prices, and more specifically crude oil prices, are going to drop over the next year or so. The things that we're considering on that would be OPEC plus production coming back online. So we've got OPEC plus unwinding a lot of the cuts they've made over the last couple of years. That supply is going to hit the market over the next few months. So that's a big thing for us to consider. We've also got growing crude exports from Latin America. So countries like Brazil, Guyana, and Argentina also coming into the market. Now, that crude oil supply has to find homes. So the largest demand center for crude oil is China. And Chinese demand has been a big focus of what we've been speaking about over the last week. So two big things for us to remember here. We've got the Chinese refining sector, but we've also got Chinese storage. So China imports a lot of crude oil into its strategic petroleum reserves. We've seen a lot of that this year. So China, in this low oil price environment, has been importing a lot of crude oil for use in storage, so for future use. So China's been taking advantage of low oil prices to buy up lots of crude. The key question is, how long is China going to continue to do that? That's been absorbing the excess crude that's been coming into the market, but it remains to be seen how long China will continue to buy up crude. So that's a big thing we have to look for on the demand front. We've also got to think about Chinese demand from the refining sector. So China has been moving towards electrification in terms of its vehicles, its cars more specifically. That has demand implications for crude oil. If the Chinese car sector is moving towards more electric vehicles and fewer internal combustion engines, then clearly they're going to need less crude oil supply to buy for its refining system. I think what people are going to be looking at, though, is also petrochemical demand for China. So we would expect that Chinese oil demand will be decreasing from a gasoline point of view, but they're going to continue to be producing lots of plastic. So petrochemical demand for crude oil is going to continue to rise. So I think those are some of the things that we'll be looking at in terms of crude oil supply. Point two. So if we stick with oil prices for a moment, another thing that's going to be a key determinant of oil prices are tariffs and sanctions, specifically coming from the US. The US has set large tariffs on goods from China and also from India. That really impacts the dynamics in the oil trading world. Sanctions, if we speak about those for a moment, the US currently has sanctions on Russian crude oil, also Iranian oil. If those were to be lifted at any point, that changes the amount of supply of oil coming into the general market, and that can have an impact on prices. Then we also have to think about tariffs. So the US recently put very large tariffs on India, which means that India has to consider how it wants to import crude oil and the countries that it imports crude oil from. So that environment of tariffs that can be added and taken away very, very quickly can cause quite an uncertain geopolitical environment for traders to navigate. So that's a big thing that they've been considering this week and this year in general. My third key takeaway is on the energy transition. So I think there's been more focus this week on energy addition than energy transition. People have been talking about the amount of oil that's needed to fuel all the different demand that we have for energy around the world. So I think there's going to be big demand for oil and general energy products moving forward. But we also have to consider the energy transition, which is still a very big topic for a lot of people. I think in the panel I was looking at, one of the key things that people wanted to consider was the future of shipping and how shipping is moving towards decarbonization. So the implications there is that shipping is going to move from a model where conventional bunker fuels or conventional fuel oils are responsible for the vast majority of bunker sales to a position where we've got a much more diversified set of bunker fuels going into the mix. That has implications for cost when it comes to people trading oils and commodities around the world. That's something that people are going to be looking at very carefully, the regulatory environment for shipping and how that's going to impact bunker demand throughout the world.